Good morning, guys. Welcome. We're going to get right into the stock market technical analysis. And, we're an hour into the open today, so I'm putting out a quick video. Lots can happen, obviously, between the time I put out these videos and the close. And I try to articulate that and point that out. Really, what I'm trying to do with these videos when the market is open is give you an idea of maybe certain levels to watch and that are important. And then, you can make a decision based on your, risk tolerance and position sizing on those levels. So I think it's helpful. But again, when I make a call early in the morning on what I think is going to happen the rest of the day, ultimately it's just speculation. I'm looking at the chart. I'm weighing the various candles that I'm seeing and the levels that the market's trading at across other markets and making a call. And so I just want to point it out. Obviously, I don't know where the market's going. Nobody knows where the market's going. The best we can do is read the information we have and then take a risk, basically. And the idea around key levels, resistance and support levels, is to keep our risk as small as possible. There's always going to be some risk. Here we go. Triple Qs. So I don't like the fact that Qs has popped back above this level, this 280.40. We've kind of popped it on this hour right here. Did get a close just slightly above that level on the hour. So I'm waiting to see how this next hour closes out. What happens here? Do we sell off and fade it back down below, or does it start to rally? If it starts to rally, we might, I think it's important to see what's the nature of the rally. Is it impulsive? And if it's impulsive, then that might be a breakout of this big trading range that we've been in for a while. So we have not broken out of this range as of yet. They've made it look like it wants to break out. So we'll see if it actually can do it. As of right now, I think we're still too close to this resistance level right here, and it's still acting pretty weak. You can see as they popped it this morning, it sold right down to that level, and then in this hour that we're trading in right now, we're still just kind of trading around that level. So waiting to see how this next hour closes out to give me an idea of where this thing might head. Now, if they do break out, then there's quite this is a lot of trading action here. So if they break out, that might be enough momentum for a full kickback rally to this trend line up here, this green trend line, and that's up there a ways, maybe up around 300. I mean, at this point, if we do it, we'll probably make a new marginal high on the back test of that broken trend line. So it'll make the market seem like it's making all-time new highs, and it will be. But it will be doing it right into pretty big resistance. So I think it'll be a marginal new high where it just pops a new high just briefly for a day or two and then sells off. So that's one possibility of what happens. Another possibility is we fail here. They make it look they made it look like it's going to break out, and then it fails back below resistance, and we continue to battle with this big sideways trading, this big trading range we've been in, ultimately breaking to the downside. Same deal with the S&P 500. We popped just slightly above the resistance line that I have. So again, and you can see they did get an hourly close above it. The next hour they're kind of popping it, but it's struggling as of right now. So again, I need a little bit more information, so we're just gonna have to watch that. But as of right now, we're slightly above it. And that is, that's sitting around 342.50 on the S&P 500. Negative divergence is still intact though on this. So this is a new kind of divergent high where it's making a slightly new high with less momentum. It's not a very steep divergence, but it is there. IWM up around these levels to me looks like a pretty good short, and here's what I like about it. So you can see here on the hourly, we're probably, if we turn down anytime soon, we'll put a negative divergence right there on the RSI. And we have negative divergence here on the PPO on the hourly, just kind of shorter time frame stuff. Now we also have this gap. If I go to the daily here, you can see here there's this gap right there, and we are, to fill the gap would be up around 166.54. So we could pop just slightly up and fill that gap, but this is a big sideways trading range that we've been in really for quite some time. I don't expect that we just break it while the other indices are not breaking out. So if the other indices can break out, then maybe the IWM can break out too. But again, lots of resistance right up in here, and IWM has been in a bear market, so you probably have a downtrend line, something like this. So we could pop up and just kind of fill that gap right up here around 160, 166, 167, somewhere right in there, and tag the top of that resistance line and then fail. That's completely possible. It's just an area of high resistance, so I do like it. I'm going to watch it a little bit more though before possibly taking a position. This one, PHM, I added to my short today. I told everyone yesterday that that's what I was looking for, was a pop right up into resistance up around 49. We did get that today. And you can see here on the hourly, they popped it right up here, got close, and my trend line might be off just slightly. It's close enough where sellers start to step in and shorts are adding. So we popped it up to 49. I added to the short right up in there. The reason why I like adding to the short right there, that's a divergent high. You can see the momentum on the hourly here is making a lower high in the peak right there and a higher price. And it's even more prominent on the daily here, which tells me it's a bigger pattern playing out. So the daily here, we popped that high of 49, making a marginal new high above this previous high. The reason why I'm looking at this peak right here is this is when our divergence really started. So here's the top of the top of the peak where we made the price high right here. Then we made a lower peak in the momentum and a higher price. So this is when we had negative divergence was noticeable right here. And we just popped that peak right there just briefly up when we hit 49. And we made lower momentum with a lower peak. So I added to that, and it was right into resistance. Looks good. Looking for this thing to roll over now. Carvana here, continuing to work to the short side, looking for a gap fill. So you can see we're just kind of drifting sideways, starting to get weak and roll over. This will probably be impulsive when it happens. You'll probably run down and fill this gap pretty quickly. So I could see this chopping sideways a little bit more, even kind of doing some more kickbacks where it kind of has a little relief rallies and then just impulsively dropping out of the blue. So negative divergence was in play. So you can see here's our peak on the hourly, and then we made a lower peak while price was making a higher price. So this was a divergent high and starting to play out to the downside. So I continue to look for this to run down and gap fill around 170, around 174. And from here, that is a drop of about 20%. So staying with this one till the technical posture changes. Zoom here continues to have negative divergence. It's still in play, still intact. You can see it right. It's not there, but it is here from this peak right here. And also, if we look at the daily, clearly on the daily, we've got negative divergence. And negative divergence on the daily is much more important than seeing it on the hourly. The daily is a lot more of a longer time frame chart. So when you see it on the daily, it gives you an idea that a bigger pattern is going to play out. And that's usually good for a swing trade. When you see it on the hourly, you can get a short-term drop and then whipsaw signals. The daily is a better pattern for kind of looking for a swing trade. So we have it, but again, this thing just kind of died on the vine up here. It's just consolidating, going sideways, not doing anything. So nothing to really do. There's no action, no trigger yet, but we're watching it. Okay, so Philip Morris has started to make the move I was expecting it to do. Nice gain yesterday, up about 5%. And what we liked about this one, or the reason why I liked it was we had bullish divergence, but you could see it clearly on the hourly here, but nice clean bullish divergence right here. As prices were continuing to fall in Philip Morris, momentum was starting to build an uptrend. And so that was your positive divergence telling you that this drop was about to change trend, and that's exactly what happened. So that's why when I was going through these kind of acute videos explaining where I was buying this thing, I was buying Philip Morris right down in here as it dropped below this support level that looked like the objective area to go long, and then it obviously it's run up from there a high of 8.5% in pretty short, in about 4 days. Pretty good gain so far. So a pullback would be in order, I think, after yesterday's move, maybe down to the 77.50, and then a continuation to the upside is what I'm expecting. So DraftKings here continues to work, playing out as expected, and the reason why I like this one. We had negative divergence. It's really the same kind of deal over and over, but we had negative divergence here. You can see it here on the daily, where right here we made a peak, kind of the high peak where the price was right here, and then we ran up and made a higher price on a lower momentum peak right there. So that was your negative divergence. That was your tell that a trend change was imminent or coming soon. And then you look for a break in trend. You could have, so I've got a couple trend lines, but if I get rid of this one, then you had a bearish rising wedge. We broke trend there and are rolling over. And if I bring that one back, then we broke trend right here and we did some back tests. Ultimately, both patterns were still bearish, even though one would say you continued to go higher and then you break. Everything was negative divergent. It was just showing that this was the end of the move, and we're going to start to see the downside move. So from the top now, and really if you look at this bearish rising wedge pattern, I mean, from the breakdown, it's fallen about 15% in pretty quick order, and I don't see any signs that it's done selling yet. We haven't even hit the first support level that I've got at 49.37. It could, you could have a support level down here at 47. Yeah, it's about 47.50 I see, but I've only got a couple reactions down there, so I can mark that one out. But I like this one up here a little bit better at 49.37. Now if it slices, so we probably will get a reaction there. Maybe we bounce up somewhere in this area. And then next level of support, 43.78. And then if we break that, then we're probably going to come down to about 35.48. Those are the levels that I see on that one as this continues to work and continues to make lower lows and lower highs. You can see yesterday they had a little, it gapped down, and then the buyer stepped in and bought it, and it's since, given all that up and continues to be weak. So weak stock. All right, Tesla, I don't know what Tesla's doing. Maybe it's trying to run up and do a back test of the broken trend line. That's possible, and and as expected, there's a high probability that we're in this area that it would do that. So you've got this uptrend line here on Tesla, and we've already had one back test. We broke the trend line. We did a back test, and maybe it wants to do another back test, run up and tag it up around, depending on when we get there, 480 or something like that. If it does it soon, then it's going to, continue the negative, it'll be a negative divergent high, basically. If you look at the daily, let me get rid of this line. If you look at the daily here on Tesla, you can see we're starting to build this kind of larger negative divergence here on the daily, where it is basically a big pattern. Each one of these peaks has been on lower momentum. Now, that doesn't necessarily mean, get short this thing when you see negative divergence, because Tesla can run pretty heavy. So that's why we waited for the trend line to break. And so here's your trend line, your uptrend line. You wait for that to break. And then, now we run the risk of, maybe making a couple back tests, but, the trend is broken. So it's going to have to battle with that resistance trend line each time it gets up there. Here's Redfin. Looks like it's running out of steam. Big negative divergence on the daily channel, or the daily time frame. You can see here momentum has been rolling over, and the price has been making new higher highs. So divergence right there, negative divergence. Also in the PPO, it's there. You can see it right there. And so it tells me that this thing's running out of steam. Now, if you go to the hourly, we had this short-term trend line that was broken. It looks like it did a back test. This probably could extend out, maybe a couple back tests, and now it looks like it wants to roll over. So that's a possible, area. We're at a possible area where it's objective to go short. It's not my favorite right now. I'd prefer, with this big of a divergent pattern, to see this lower trend line break down around 45. It's down there a ways. That's a 15% drop. So I don't know. You got to pick and choose the best ones. This one's okay. It does have a big divergent pattern. It's just, I just don't see the cleanest break to get us down to this trend line. So this could go higher, before we break down. I do think at some point we're going to be back down at this trend line, and then we'll watch for it to break. And we'll wrap up with the dollar and gold. Gold here, you can see, continues to struggle. It's continuing to kind of sell off, grinding sideways, indecisive price action recently. But, we did have the breakout of the support level and this nice impulsive failure here. You can see here, 1906 is really where I had some support. We tagged that previously several times. It held the support, and then it broke, and it was resistance, and we broke above it just briefly, and it's failed. And then this, to me, looks just like a kickback rally, and then we make another leg lower. The dollar continues to, kind of chop around this support resistance level of 93.70. I think that, to me, it looks like we're just continuing to create this basing pattern right here in the dollar, and the dollar wants to make a move higher. Again, I'm still looking for that 95.50 area up here, so watching for that. Okay, we'll wrap up this morning video, and if anything changes or gets crazy throughout the day, I'll put out a closing market wrap video. But as of right now, we're just kind of chopping around, and so I'll get this out. Thanks, guys. Appreciate it.